My big take is, we started a new bull market in May of 2023. Some people say it's the October of 22 lows. It's all semantics. Who really cares? Yes, we made a low October of 22, but I'm saying May of 23 because this bull market is being led by AI, and that's when NVIDIA had the greatest quarter or surprise in the history of the market. So that's when the true market leader really started to kick things off with the demand in AI. So I think this could be very similar to the 90s, where I've been saying, let's say 23 to 2023, it could be a 4 to 5 year bull market. So I think we still have a couple of years left in this. Even Jensen Huang has talked about we're only a couple of $100 billion spend into a multi-trillion-dollar spend in AI. But this is the big factor in all this is it's never going to be smooth. It's not going to be straight up. If you told me take any 5 year period, or you had a time machine and went forward in time and said this 5 year period was going to be a bull market, I can guarantee there's going to be major corrections and shakeouts and pullbacks along the way. Just like from 95 to 99, you had a major correction in 97, with the Japanese debt crisis, and then in 98 with long-term capital and the Russian debt crisis. There were major corrections along the way. So if we were 23 and let's say this goes into 2027, we had that tariff tantrum, as you mentioned. We're going to have, it's not going to be smooth. So bigger picture, I still think we're in a bull market, but there's going to be shakeouts and pullbacks and rotations and corrections along the way. It's just the nature of the markets.
Mm-hmm. Absolutely. Now, of course, the one, the 99 2000 was known for that bubble. And look, a lot of people were calling for the bubble really, really early. I mean, if you were, God forbid, shorting when you thought the bubble started, you could have gotten yourself in some real big trouble. But even if you just said, "Oh, I think we're in a bubble, I'm not going to participate," you could have missed out on one of the greatest bull moves in history.
Yeah.
So I guess, when do you know? When do you know that it's time to take some of that off, or do you just? I mean, you said at the beginning, you either sell into strength or you sell into weakness. What are you kind of using as your game plan here?
I look, medium term, I'm glad you have the weekly chart up. The red line's a 10-week moving average. That's an area of institutional support. I've said this over and over. The big institutions control the markets. My opinion doesn't matter. Your opinion, as much as I respect, with all due respect, doesn't. No one's opinion matters, because the big pension funds and mutual funds and hedge funds, they control the market. So we have to do our best to interpret what they're doing. And if a simple 10-week moving average is traditionally an area of institutional support, if we're holding that level, that tells me the institutions have our back and to continue sticking with the trend. When we see a lot of distribution days and a lot of leaders break down and we start to break through that 10-week, then that would be a sign of at least a yellow light to get cautious and maybe raise some cash and get more defensive. Some people have a different time frame where they use the 200-day or the 40-week, the black line on that chart. This is what I mean by reducing position size and giving yourself a little bit more time, especially if you are working full time. Maybe you're in a different time zone. You're in Europe, you're in the Middle East, you're in Australia. You love trading the U.S. markets. You're retired or semi-retired. You don't want to watch the markets all day. There's nothing wrong with expanding your time frame if you're okay with that, and using that sort of, I know a lot of longer term trend followers use the 200 days. So those are just to keep it simple, areas to know whether the institutions are continuing to back this market or not.
Mm-hmm. One of the things that's been a little bit tricky, though, as strong as the NASDAQ looks, and I'm going to put the S&P 500 up because it's, same thing. It's holding the 10-week moving average line. It's just trending so nicely above the 10-week moving average line. One of the issues for some people pointing out is that breadth. RSP. Yeah. This is the equal weighted S&P 500. So it's kind of like, oh, what are the other 493 stocks doing besides the Magnificent Seven? And this has been a downtrend. Now, a little bit more recently, it seemed like it started perking up, but this was spending time below its 50-day moving average line. This was
Yeah.
just not having quite the oomph. And again, if you look at your average stock, a lot of them were below the 50-day moving average lines even on the S&P 500. So what
Yeah.
what do you make of that?
Yeah, I even just tweeted out as of today, about 35% of the S&P 500 is 20% or greater off of their highs.
Mm,
So a lot of, I hate to use individual stocks in the bear market phrase, but a lot of individual stocks have corrected considerably. And to your point, with the equal weight, I mean, this is where it just depends on portfolio construction. Some people say it's the same 10 stocks going up and the rest of the market stinks. And my wise ass response to that is we'll just be in the 10 stocks that are going up. But that doesn't work for everybody. But this is where it just depends on time frame and portfolio construction. I've said this so many times. A lot of growth stocks are even more than 20% off of their highs, but that's because they just made literally 50 to 100% type of gains recently.
right.
So they're gonna, you have to take the good with the bad. You can't complain when something's 30% off of its highs when it just went up 100%.
Hmm.
So it's a challenge. Of course, I would like to see the entire market participate, small caps, mid caps, all the sectors. It is a challenge right now. You'd like to see it all, but at the same time, the majority of earnings estimates that are going up are coming from the Mag 7 and they're coming from a lot of those leaders. And I would just say try to stick to as best as quality as you can. There's some friends of mine who are value and they would never touch the Mag 7. So they have to find more beaten down names, but that's also if you have a longer time frame. So it really just depends on your strategy, your time frame. But my simple answer out of this whole rant or ramble is I just try to stick with as best of quality as I can, as long as they're holding key support.